All right, welcome into Market Day Report. I am still Scott Schulte. Been at him all day today. I'm the cow guy too. Why don't we take a look and see about these ag markets so that I'm sitting here in a black and white cow jacket? That would probably be a great idea. Corn just probably bleeding a little bit lower here by about a penny or two. 7 cents lower now, lower in March. 6.46 evens last. Maize down by 6.5 cents to 6.47. Let's see about soybeans. Let's take a look at those and see if the technology gets us there. That's come off another 3 cents-ish, kabibble. Jan's down 16.75 cents to 14.63 1/4. March is off 17.5 cents to 14.66 1/4. How about the wheat? The wheat in Chicago, 5.5 cents lower in the March, 7.48 even. No buyers showing up here today, folks. Nobody wants to buy anything, so this is just going to keep bleeding lower, all of them. 4.5 cents lower in May, 7.56 3/4 is last. How about hard red wheat in Kansas City? That too is bleeding lower. March is off 8.75 cents to 8.35 1/4. May's down 9.5 to 8.28 1/2. There you go. Spring wheat in Kansas. No, this is in Minneapolis. Spring wheat in Minneapolis. Let's see. 4.25 cents lower in the March. 9.05 1/4 is last. In the middle of the day's range. May's down 3.5 cents to 9.01 1/4. And then finally, we're going to take a look at the cotton. Cotton had some headlines this year. This thing's shot up as of late. March, 368 points higher to 85.60, 15 points off the highs. All right, let's bring in Todd Horowitz. He's with Bubba Trading. He joins us from Chicago today. Thank you very much for being on the show here, Todd. Look, let's not make up any lies. There's not a lot going on. There's no buyers there today. A little bit better weather down south. And now that I've taken all of your topics away, what are you going to talk about now?
Scott, if you have trouble sleeping, just watch these markets for a little while and you can take a good, solid, hard sleep here because there's nothing going on. The same lack of action, lack of volatility, lack of liquidity, and lack of any interest in any of these markets is continuing. And as you and I both know, this is a time for the scavenger hunt. There's no real professionals trading now. This is all the desks are all filled with the skeleton crew, and the actual people that trade on the floor, or used to trade on the floor and now trade electronically, are on vacation. This is going to be a slow and wily period, I think, for the next 2 weeks at least, until we get back after the first year and kind of get a gauge on what's going on.
Yeah, I mean, it can be that way here. It definitely is. But they're also trying to put a positive spin on it here, Todd. Bear with me. Isn't it time that if you think, hey, put some wish orders in. If you want to buy it a lot lower, put something in, or you want to sell it a lot higher, keep something in, because these things happen overnight when you're not awake or you're, at the coffee shop. I mean, it might as well try to take advantage of the craziness instead of trying to be, somebody that just gets jerked around by it.
I agree with you 100%. Listen, I'm long grains and would look to buy more. I mean, listen. If you look at the bigger picture, they're really just stuck in these wide ranges and really haven't gone very far. Yeah, they're a little bit lower, they go a little bit higher, but really we haven't gone very far. And certainly I still believe that there's a big boom to the upside, and I do believe that the new year, sometime in the new year, I think we see a big boom in the commodities. I think we actually could see big markets next year. The entire scope of everything that we're looking at doesn't make a lot of sense if you look at it just from a logic standpoint. Listen, markets are not always logical, but from a logic standpoint, what we're watching does not make any sense whatsoever. And I think that, if you have some prices in mind, I would be happy to work on there. I'm happy to buy a little bit here and nibble because, again, I'm willing to, to hold through what happens here, because I do believe that the right side of the market will be the upside when it finally starts to move. But of course, it's very painful to get them to, when they take them down a little bit. It's like, one drop of blood at a time they're taking from you.
Yeah, I mean, and that's indicative, and I like what you hear. I'm sure the producers out there like what you're talking about, because next year is going to be an interesting one. All the problems that we had this year have not been solved, so we're going to take them all into next year. So if anybody thinks that any of this volatility is over with, or the silliness has got another thing coming, so stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz from Bubba Trading after this. All right, welcome back to Market Day Report. Let's take a look at the livestock. Can't really afford not to look at them if I'm wearing this jacket, right? Let's start with live cattle. That would be apropos. They're just a steady little bit easier here. February's just on the north side of unchanged. 30 cents higher, 156.07. April's up 22 cents to 159.92. And if it matters, June is sharply unchanged. There you go. I love saying that. All right, how about the feeder cattle? Let's take a look at the feeders. A little bit easier here, except for Jan leading the way lower, $1.60 lower to 182.17. We have been a little bit lower than that even, so we're not quite on the lows of the day yet. But March is also off 60 cents to 184 spot 10. And then finally, lean hogs, let's see what they're doing. They're holding up pretty well after Friday's rally. It was a good rally on Friday, very, very good rally on Friday. We're only off 12 cents in Feb after it was over $4 on Friday. 85.65 is last. April's last, 93.17. That's up 45 cents. So we actually are posting some gains as you go out the deferreds after February. Let's bring back in Todd Horowitz. He's with Bubba Trading, and he comes to us from Chicago. Todd, any thoughts on the livestock there?
No, I think they've done exactly as we've talked about almost every other day, and that is they reached the upper level, the upper limit, and they're seeing a little bit of pressure, but there's not much pressure here. And it's interesting, when I looked at them earlier, they were leaning a little bit towards the upside across the board. Now everything's obviously slightly lower. But we're really just stuck in these big, wide range bands, and I don't think that they're going to go anywhere too soon, too fast. But they will be affected by the same problems that the grain markets and the rest of the commodity space is, which is hiding from the real facts. And as you said before we went to the break, nothing has changed. We don't have a magic bullet that suddenly made everything better, which should lead to higher prices. So that could be good news for farmers and producers.
Yeah, we got to be careful. I mean, if you slowly but surely take a look at a lot of the rhetoric that we had this year, going into next year, some of that inflation rhetoric, Todd, has changed from inflation to recession. What do you think about that?
Well, again, if they didn't change the rules on recession, I would think that we're already in one.
Yep.
I think I tell everybody, just look at your own spending and look into your own balances, and you tell me if you're in a recession or not. I don't want to wait for some economist to tell me that things are in trouble. I think we can already see that we're paying a lot higher prices and we're making less money. That's the bottom line. You can use the Black Friday sales as the key benchmark. Yep. Everybody brags about the sales, and they were actually negative.
Or the last retail sales number we got last week. All right. Really appreciate this. Great stuff. Todd Horowitz in Chicago, Bubba Trading. Thanks for coming on the show. I'll bring it back here to Nashville and throw it over to Janet.